Welcome back. You're still tuned into Markets at Noon, and we've recovered again from the lowest point of the day. In fact, we've seen a sharp spike come in over the last few minutes, and Nifty is now trading near that 26,125 mark. But let's get in a corporate to discuss what the outlook is going forward, especially when it comes to exports. We have the management of ELGI Equipment's Managing Director of the company, Mr. Jairam Varadaraj, now joining us. Thank you so much for taking your time out and joining us here on ET Now. And first up, let's talk about your exports business. It has been a key concern in the quarter gone by. You've maintained a cautious stance due to impending US tariffs. But now, what has been the status so far, and what's the outlook for the second half of the year? Is exports likely to improve going forward?
We had a pretty good second quarter. It could have been better by our own internal standards, but in relation to last year and the trailing quarter, we did well. We grew our top line across almost all the geographies except Europe. Europe was a little flat for us. To your specific question on what we see as the outlook for the third and fourth quarter, I think it will be a lot better than Q2. So we are beginning to see traction in most of the geographies that we are operating in. Specifically on tariffs, I think I have mentioned this on multiple occasions. We started with 10%, then 25%, and it's 50%. And the team has done an outstanding job. We've been able to take cost out without compromising quality, without compromising customer value. We've been able to take cost out, and right now we are agnostic of duty. So it's not going to affect our bottom line. So that's the good news for the balance of the year and in the future.
Okay, and Mr. Varadaraj, also help us understand, while we are talking about tariffs, tariff uncertainty is causing OEMs to delay their orders. But when are you expecting to see some normalization over here?
So we are not an OEM-driven business in any significant way, so we don't have any issues on that front. And like I said, we've been able to mitigate the cost impact of tariffs internally. And as far as customers are concerned, both end users as well as OEMs, we've been able to maintain price stability for them. So business continues without any impact of tariff being felt by them.
Okay, and what is your outlook when it comes to your Europe business? Because that continues to remain weak and continues to report losses quarter after quarter. After the cost reduction plan that you've envisaged, what is the outlook? When do you expect Europe to break even?
We have completed the reorganization of Europe in terms of taking cost out. But, in specific countries in Europe, there is in all fairness, a settlement process where employees there is a severance that is involved. So that cost while the compensation will be a savings, the severance will be an additional cost. So we expect that the true impact of Europe in terms of breaking even, we will see next financial year.
Okay, and also given that global markets continue to remain concerning, are you looking at increasing the domestic market business share further to offset the losses from the global segment? And what's the domestic and international mix that you're going to be targeting for the next 2 to 3 years?
So for us, India is a very key market, it's a home market. And of all the economies in the world, India has got the most positive sentiments. So we don't have any specific target that India should be this percentage and the rest of the world should be another percentage. We try to grow in all our strategic markets, India being one of the most important of that list. So, it all depends on how the various economies grow over the next few years.
Understood. And you've also mentioned delay in orders. What is the current status as far as your delay in orders is concerned, both in India and in the overseas market? And are these postponements or potential cancellations, or do you expect order wins to gradually come through?
There are no cancellations. It is just that inquiry levels remain very strong, especially in India. But because of all the global uncertainties, customers are taking a little longer to finalize. That we are seeing, but there is no cancellations or any concerns of that nature.
Okay, and if you could also help us understand or share with us where does the current order book stand and the expected timeline for the conversion of the same?
So we are not a, order book based or a project based business. We are a book and bill business. So our enquiries are the main pipeline. I don't want to get into the details of enquiry levels, but the enquiries are very healthy compared to even prior quarters. So the only thing is the conversion time is taking longer, but in spite of that longer thing, our conversion levels are very high because of the healthy enquiry levels.
Okay, so inquiry levels are healthy and that is leading to high conversion ratio as well. But let's also talk about your CapEx plans then. I believe there's a 2,500 crore CapEx out of the total 6,000 crore which has been delayed by another 12 months. Take us through more details of the entire CapEx plans, what is leading to that delay, and if currently demand is still, is the demand still aligned with capacity addition plans that you have?
Yes, it's not the entire, 2,500 crores has been delayed. About 40% of that plan has been delayed because we hit some really hard rock in the foundation and it's taking longer for the excavation, and that's the only reason for the delay. There is really no dislocation because of that, because this investment is primarily to shift the location of manufacturing from the city factory to our main campus.
Right, and Mr. Varadaraj, if you could share some timeline on when the new low-cost compressor line will launch and what market share are you targeting in that segment in a way that it does not cannibalize your existing premium range?
We expect to get into the market by the early part of next year, hopefully in the first quarter of next year. That's the plan. The low end of the entire market in our estimate is about 30%. Today we have about 25% share of the overall market. So our aspiration is that we should have at least at the minimum 25% of that 30%. So that's really the goal.
Understood. And what about your outlook for the third quarter? If you can share any guidance with us, because you expect third quarter to be similar to the second quarter. But apart from tariffs, what are the other key risks that could impact third quarter earnings? And would you like to revise your outlook once US tariff policy stabilizes?
No, we're not. We are quite confident that Q3 will be as good or stronger than Q2 for sure. Profitability also should be better. So there is no revision in our outlook for the rest of the year.
Okay, so on that note, Mr. Varadaraj, we'll let you go. Thank you so much for sharing with us your growth outlook as well as where you are seeing your export business headed. Thanks so much. Okay, on that note, viewers, we'll slip into a very short break on this edition of Markets at Noon and be right back with more news and updates on the other side.